So I thought I'd make a video about the difference between my trading now and my trading pre-consistent profitability, and just talk about what the biggest difference between then and now was, and how I'm able to actually produce consistent results now. Actually, recently, I went back on myself and stopped doing what made me consistent, what the final step to consistency was, and I saw my results completely turn around. I then implemented the very same fix that brought me to consistency, and then all of a sudden I've been back on track. So again, further proving this was the thing that caused consistency. I'll look through the charts here in a second, but essentially when I made this change, and it was a mental shift and also to some degree technical as well, I went from consistently losing to 4 straight months in a row of winning, with over a 50% win rate on every single one of those months. The fifth month, obviously, last month actually being negative, and then very likely going to be going on for a positive month this month, and positive so far. It's only the 6th, only done 1 week so far, but you'll see even in this week, the thing I'm going to talk about has helped me actually be profitable, or make gains rather, it's just to some degree this week. So the thing I'm going to talk about is a way of removing losses, and that is essentially just taking high probability setups, and that comes in many different forms. So that can come in a technical form where you're only looking for things that are optimal, that meet a lot of criteria. In the context of what I've learned, this can be, for example, the economic calendar, what that's saying at a particular time. For example, if you have FOMC in the evening, the AM session is not going to be a very good session to trade. So are you looking at a high probability condition? Probably not. A lot of my technical stuff comes from ICT, and then really just the experience I've had, which has been the last 3 years, something like that. So that also tells me when the conditions aren't as high probability as they could be. The other thing is the problem I had was I wanted to take every winning trade that my system produced me. So you'll have a system, you'll have presumably some kind of signal. The way I trade is the way I think really everyone has to trade when it comes down to it, which is discretionary with mechanical components to it. So you may have, if you have, say, a set stop loss or something like this, or a set R take profit, that's a mechanical component. That's not that that's what I have. A lot of what I do is discretionary, but for example, I will use specific concepts from ICT. I'll use a specific time frame and reference those concepts. For example, at the fair value gaps. However, the underlying principle to how I trade is using a bias and narrative, which are two words that are thrown about. But using those to frame the trade, and then clearly using discretion to take the best setups. So my problem was I wanted to take every single winning setup that the system allowed me to take, and in doing so you pay a price in terms of the losing trades that you're going to take with those. And you'll find when you're trying to find a system that works, you weigh up obviously how much you win percentage wise, and then the R that is produced from those wins versus how many losses you have to take in order to take those wins. And what I was finding was, in order to be aggressive enough to take the setups where I was taking the wins, I'd have to take a lot of losses. And this was without realizing that all I had to do was aim to take a tiny fraction of those setups. And in doing so, get rid of a lot of those ridiculous losses that never had to be taken, and ultimately be taking just a few of those wins. And when your average R, like mine, is usually between partial profits and full take profits, it's over 2R per winning trade. When it's like that, and then you come out with a 50% win rate, obviously that's consistently profitable. The catch is that your frequency is going to drop, and it's going to be a slower process than you're used to in relation to what you're looking at with your model. So I think this is one of the big key areas, because it's so hard to do. And you're going to have a natural inclination to, at least for me, my biggest problem mentally was that I had the classic FOMO, fear of missing out, which can be defined in many different ways in relation to trading. But yeah, in my context, I didn't want to see an opportunity appear and then not take it, and then it result in a great big winner. And you feel like, wow, I could have taken that one, I could have been up. That was a signal that my system gave me. But as far as I'm concerned, a lot of mechanical systems aren't profitable. So if you're trying to follow something mechanically, I'll take every single signal it gives me. As far as I see, that's not going to work. I believe there are systems that do work like that, but I've never been able to make them work personally. And like I said, for me, the hardest thing was, and still is to some extent, letting an opportunity go where I've said, you know what, I don't want to take this one. However, reframing in the mind towards looking to be consistently profitable rather than looking to make winning trades has allowed me to recenter my focus in acting the right way and thinking the right way. And this obviously includes being okay with missing large winning trades. Now, the example I mentioned earlier, where I actually went back on this for about a month, and I suddenly realised what was going on, and I fixed that, or at least I think so right now. That's another topic to get into, but in another video at least. But what happened was I decided not to take a trade. It actually wasn't for one of the reasons that I would usually not take a trade, i.e. it being low probability. It wasn't for that reason. Something spooked me out last second. I decided not to take it, and I missed a great big trade that could have moved my month from being decently profitable to very profitable, because it was a very large winning trade. It ran to full take profit, and those ones can run, 4R for me. So that can make a massive difference on the month's return. What I should have done was just recognize, hey, I'm profitable for this month. My aim is consistent profitability. Yes, I missed it. Yes, actually, with better performance, I should have taken it. It was not necessarily one of those ones, or it wasn't one of those ones where you say it was low probability, no problem, I didn't take it. That's the price you pay for consistency. It was one I should have taken, but I should have just moved on from it and understood that it doesn't change my long-term profitability. It just changes that small result in the present. And then it caused me to then say, right, when certain conditions are met, I will definitely take the trade. And that moved me back to a mechanical position. So maybe some people are having a similar issue to this, but what you have to do is take less trades. Only look for high probability conditions. I've got the chart up here because I think the S&P right now, which is why I trade S&P and NASDAQ. I think these markets right now are a good example of where low probability conditions are in effect, at least for me. And I think those also need to be measured in relation to your strategy. So where is your strategy most likely to work out? What I'm doing is determining bias. I'm looking for a 5 or 15 minute fair value gap that can support price. I'm looking at a good area to place the stop loss. I'll take the entry on the midpoint of that 5 or 15 minute fair value gap. I'll use the higher time frame one, and the secondary bit to bias, that narrative that pushes the odds in my favor, is I need equal highs or equal lows to be involved in the trade, meaning the entry has to either sweep equal highs and equal lows to give me the entry, or I need to be targeting them, and most of the time I'll be targeting them. So out of this week, there were 2 trades One was on the Monday, and that was a losing trade by 1 tick. And one was on Wednesday, and that was a winning trade and only a partial. So I had a win and a loss this week, but technically down on the week, but that's absolutely fine. The market only gave me that win and that loss. And the funny thing is, by remaining patient, I was still able to take the only winning signal that my strategy gave me this week, and I was able to avoid potential losing scenarios on essentially all of the other days. So to go into the winning trade, this was on Wednesday right here. If I go, I do have it documented, but I thought, okay, it's actually already in it. I still have it put in here. I was essentially looking at the previous day being a large down day, thinking we're likely to continue down into that previous day's low one more time at least. I saw how price pre-market had come up into this 15-minute fair value gap and it started moving to the downside. You can see 230 opens up right here. We had a 15-minute fair value gap. We had some little equal lows here. We dropped down to a lower time frame. We had swept those out, I believe, prior to the entry. But we did have some pretty good lows here at London. The London lows, these are not necessarily equal lows. I don't count them as them because it's already technically swept that low, but it depends how you classify them. I like to just look for lows that are very, very obvious. In this case, these are also very obvious, so this could, depending on how you want to view the market, you could view this as a good area of liquidity, which is what I would view it as. I'm viewing this area as an area where if it takes out this high, then we're likely to continue upwards. Now, I don't know what it actually did here. Yes, I mean, you can see it takes it out, and ultimately we did continue upwards to some extent, but I just mean in reference to this particular session, or this particular set of movement. As to what it's going to do later on, I'm not really that bothered about it. If I just go here, and then I believe it might have been, was it Dow? Yeah, so Dow had the equal lows in. Dow had the previous day's low. This is Wednesday right here. In terms of the colours as well, you've got London session is green, AM session is red, lunch is yellow, and PM session is purple. At the previous day's low and the day before that, which was Monday, so you've got the intra-week lows right here, equal lows, that's what I want to target. I was looking at a 1 hour fair value gap because at this point, on a higher time frame, we'd swept the highs. I want to see it potentially make its way down here. We'd left, like I said, sell side here. I had some areas where price had reached back into up here, which I felt was in line with order flow, bearish order flow. But price was moving long pre-session, which I was a little bit confused about. I thought, right, well, I do want it to go short down to these lows. So I was looking at the hourly fair value gap there as the only place we could potentially go short. If I go down to the 1 minute chart, you can see that 2:29. This is UK times, but this New York time is obviously 1 minute before the open, being 2:30 for my time, which is 9:30 New York time. Price moved up into the hourly fair value gap, started to pull off short. If we look at this in relation to NASDAQ, you can see it started to pull away short when NASDAQ didn't really go there, but I knew that this would provide further pressure down into these equal lows at the London lows. You've got triple equal lows, potentially even this one if you want to include it. And then also those higher time frame equal lows, which ultimately it didn't get down into that, but that would have been where I was looking for it to go and potentially continue through for those further targets in NASDAQ that I wasn't able to get. But I essentially knew this was high probability that the price was moving down here. We had a good bit of volatility coming in, and I targeted the downside. And like I said, I was targeting further. I was targeting down here for my final take profit, or potentially further based on the other markets, and only got out with a small partial and then break even on the final position. But to put it into context, obviously I took a trade on the Monday as well. That was in S&P, and unfortunately I was just about stopped out. And funnily enough, Monday was another one of those scenarios where, okay, I could have actually, in hindsight, seen that, yeah, it's lower probability. And the reason for that was, we have a look here, what are we at the moment? We're October. right here, you can see Fed Chair Powell was speaking at 1:55, so that's why you see there's a lot of movement in the PM session, and this was fairly messy in the AM session. So, and again, I got stopped out by 1 tick. I thought the setup was good enough, but ultimately it stopped me out. Do I wish I hadn't entered the trade? No, that's just a part of my model's results. That's no problem. But looking at the rest of what we see here, everything else on the surface looks okay. Obviously, we do have NFP Friday. Thursday before can be kind of tricky. We do have a lot of high impact there, so I expect decent volatility. But Tuesday, for example, price started going short. Now, I wanted to take a short. There's actually a 5-minute fair value gap up here. But my rules, other rules that I haven't particularly mentioned, meant that I couldn't actually take this. Price zooms off to the downside. We're not getting any retracements here, really nothing that I personally would be taking. And we just continue and continue. Now, when we're sitting down here, it's 3:30, the first hour of the session is gone. Are the other conditions at this point high probability? You have to think about sentiment in the market. What sort of sentiment is going on? There's high volatility. People want to get involved on both sides. The chances of you getting, after a large move, the chances of you getting in on a large run are very, very small, because you may be able to get out with partials or smaller trades, but ultimately both sides of the market are going to get tagged, because now there's a lot of interest, and the interest isn't just on one side, despite where you see this market going down. The interest is on both sides, because there's, an abundance of orders that are going into the market on both sides. Like I say, you're probably better off ping-ponging between old highs getting taken out and old lows getting taken out. It's probably your best chance if you're trading this scenario particularly. But the conditions for nice clean moves, a move appearing, as I like to trade, a move that no one has really seen yet. Maybe we're moving out of a range. So I say, right, for example, on the Wednesday, I want to see that previous day's low hit. We're sitting in this little range. It's very easy to play coming out of that range. But once we start pushing outside that range, okay, now it might get a little bit trickier, because people know we're down there. Everyone's seeing the same price as you are. So in this case, there was technically what I would deem a potential trade here. We came up, formed this little equal high right here. We'd swept out some little lows down here, no problem. That's just coming into the idea of narrative and bias. I'm expecting price to turn around at some point to go back to some short-term highs. And then right here, if I go down to the 5-minute chart, I don't think the entry was actually in the 5-minute, because there wasn't enough R available for the trade, and I also have conditions for that. But it was in NASDAQ, but nonetheless, it was the exact same chart. There's a 5-minute fair value gap there. Stop at the low. That's a reasonable low if I think it's going to go, a reasonable area if I think it's going to go into those highs. A trade could have been taken long here. Now, obviously, in hindsight, you can say, yeah, well, it's a bearish day. You don't take a bullish reversal against it. Okay, well, if you're thinking that way, well, then what about this? We swept out the low one more time, and then we're coming up towards the equal highs. So it's not as simple as that. There are other technical factors that told me that this wouldn't be heading up into those highs in this particular leg, or that it wasn't high probability, I should say. But one of the main things being, okay, do I need to search for a trade today? After we've had this move, unfortunately, I've not been a part of it. No problem. I did want to be a part of it. I did want to see lower prices when we were falling off. The way that I know the chart, I knew that we were going to continue falling off. But again, that's not the way that I trade. I don't get involved with something like that. I've worked out my method of trading. Why do I now need to get into a trade today? The answer is I don't. You end up getting very in your own head in the particular trading day, and you feel like, okay, I need to take a setup right now. And you disregard the fact that tomorrow might present something that's nice and clean. So yeah, I think to summarize, and I could go on and on and on about this, it's essentially that you need to wait for high probability conditions. If you're battling and you're trying to find that line between the amount of losses you're taking and the amount of wins you're taking, this is given that your strategy does produce wins, which is the case for the majority of strategies, and that those wins are able to run enough to make up a reasonable amount of profit in relation to those losses. If you're finding those losses are just slightly outweighing, try to not take most of the opportunities. Try to wait till you can still have doubt because you don't know where the market's going to go, but try to wait till you're as certain as you're going to get in the market. Aim for one trade a week. Say to yourself at the beginning of the week, I only want to take one of the opportunities that I get this week. Go into it with that mindset, and yeah, you may take a loss, and it may not go your way instantly, but I think you'll find that inevitably the market will reward you for that patience and selectiveness, and you'll actually end up taking a lot less of those losing trades. And the funny thing I've found is, the more I've done this, the more I actually end up taking every single winning trade. So the very thing that I'm fearful of is that's causing that bad result. When I stop doing that and I do the opposite, I actually get exactly what I want. And that was one of the strangest things that I found coming through a lot of these months, where actually I'd possibly even have been taking more of the winning trades than I was when I was trying to be super aggressive and taking every opportunity. Because inevitably you will miss opportunities. And I think that is the point where it is a psychological thing, specifically for me. And you can route it back to money, you can route it back to ego. There are many things you could route it back to. But if you can make that psychological change, and you can deal with missing the move and not being in something and saying, look, there's another day tomorrow, I've got another week next week, and understanding that the profit target for the month is not a number, it's ideally being positive, or at least just being consistent. Maybe not, it's not in that month, but being consistent overall. If you can reframe things that way, then I think you'll find a lot more success in relation to consistently trading. So that was the biggest difference I made. I'm going to upload some more videos about the psychological changes, maybe some stuff that's on the chart. Thanks for watching.